Bismillahirrahmanirrahim. Hi and Assalamualaikum warahmatullahi wabarakatuh to all the audience of the Attention Seekers TV shows. These shows will bring you a lot of information about accounting, and today our topic is on financial asset. So with me Zack, and I will bring you 6 analysts that expert in this financial asset. So what we are going to discuss today, so the first one we have introduction of the financial asset, and second one we have classification and measurement of the financial asset. So the third one we learn a little bit about the derivative, and fourth we look to the derecognition of the financial asset. Then we look for the reclassification of the financial asset, and the last one we will look to the impairment of the financial asset. So without wasting our time, I would like to invite the first analyst whom will discuss about the introduction of the financial asset based on the MFRS9 Financial Instrument. So on the line now we have Ms. Zahra from Betong, Sarawak. Hello Ms. Zahra, are you with me?
Yes, Zack.
Okay Ms. Zahra, as the first analyst, can you brief to us what is financial asset? And can you give some example on how it will be presented in the financial statement?
Hi, Zack. Thank you for the question. Before I explain what is financial asset, let's take a look at the example of financial asset. As you can see, this is example of financial assets of Maybank. In the statement, we know that Maybank have cash and short-term funds, deposit and placement with financial institutions, and financial investment at amortized cost. So, what is financial asset? Financial asset is one of component in financial instrument. Then, what is financial instrument? In accordance with MFRS 132, Financial Instrument for Presentation, financial instrument is any contract that give rise to financial asset of one entity and financial liability or equity instrument of another entity. Based on the diagram, we can see that Company A is represent financial asset, while the Company B is represent financial liability and equity instrument. So, you already know about the financial instrument. Then, let's proceed to what actually is financial asset. In accordance with MFRS 132 Para 11, financial asset is any asset that is cash, an equity instrument of another entity, a contractual right, and a contract that may be settled in the entity's own equity instrument. A contractual right is an obligation to receive cash or another financial asset from another entity. For example, when you purchase bond from other company, you will receive interest annually or semi-annual or quarterly, and you also will receive principal when the bond reach its maturity date. Next, I will explain about the type of investment. There are 2 types of investment. The first one is investment in debt instrument. In this investment, we will use MFRS 9. The second one is investment in equity instrument. There are 4 types of investment in equity. The first one is any investment that the holding right is less than 20%. So, we will refer MFRS 9 Financial Instrument. Next, for investment that the holding right is in between 20% and 50%, we will refer MFRS 128, investment in associates and joint venture. Third, investment that is more than 50% of holding right, we should refer MFRS 10, consolidated financial statement for its accounting treatment. And lastly is joint arrangement. There are 2 types of joint arrangement. The first one is joint operation. So for this joint operation, we need to refer MFRS 11. And the second one is joint venture. And the MFRS that we should refer is MFRS 11 and also MFRS 128. Therefore, for investment in equity instrument, only investment that the holding right is less than 20% is under financial asset. Am I making myself clear? Okay, I repeat. Only the investment that the holding right is less than 20% is under financial asset. Let's proceed to the example of financial asset in financial institution. So this is example of financial institution which is Maybank. I already showed it to you before. And this is example of non-financial institution. As you can see here, The items in the red box are the financial assets of Tenaga Malaysia Berhad. From the financial statement, DM have loans and advances to subsidiaries, trade and other receivables, and investment at fair value through other comprehensive income.
Okay, Ms. Zahra, I have one more question for you. How about the accounting guidance that used in the financial asset?
For the accounting guidance of financial asset, before Malaysian Accounting Standard Board (MASB) issued MFRS9, we use MFRS9 Financial Instrument Recognition and Measurement. However, MFRS9 is too complicated and left many users confused. Therefore, in November 2014, MFRS9 has been issued by MASB. The replacement process have three phases. Phase 1 is classification and measurement, Phase 2 impairment methodology, and Phase 3 cash accounting. The moment we use MFRS9, automatically we will use MFRS7 Financial Instrument for disclosure and MFRS132 Financial Instrument for presentation.
Okay, thank you, Ms. Zahra, for your presentation. I'm sure that audience will be clear a little bit about what is financial asset. So now we move to the next subtopic, which is classification and measurement of the financial asset. Here we bring to you two analysts that expert in this subtopic. So now we invite the first analyst, which is Miss Idayu from Betong, Sarawak. Also from Betong, Sarawak. So Idayu, can you hear me?
Yes, Zack. I'm hear you.
Okay, Miss Idayu, can you simply explain to us what is classification and measurement of the financial asset?
Okay, we note that there are three classification of financial asset, which is amortized cost, second, fair value through other comprehensive income, and fair value through profit and loss. Next is measurement for financial asset, whereas we measure at initial and subsequent measurement. For initial measurement, amortized cost and FVTOCI we measure at fair value plus transaction cost. Meanwhile, for FVTPL, we only measure at fair value because transaction cost we recognize as an expenses on these categories. Okay, we move to subsequent measurement. For amortized cost, we still measure at amortized cost, but for FVTOCI and FVTPL, we measure at fair value. Okay, the changes in fair value in FVTOCI will show in other comprehensive income, and changes in fair value for FVTPL will go to profit or loss. Okay, back to you, Zack.
Okay, Miss Idayu, thank you for your explanation just now. To all audience, Miss Idayu will give further information and explanation about measurement of the financial asset. So now we will invite the second analyst for this subtopic, which is Miss Ong Mimin from Kuala Lumpur. Hello, Miss Ong. How are you? Can you hear me?
Hi Zack, I'm fine here. I'm really thankful and grateful to be invited to your show.
Alright, Miss Ong. Can you share with us what is classification of the financial asset is all about?
So there are three classifications of financial assets that are mentioned by Ms. Idayu. Based on these two criteria, MFRS9 classify the financial assets as amortized cost when the entity holds the financial assets in order to collect the contractual cash flow and it passes the contractual cash flow characteristic test. Here we show you one example from Public Bank. The statements of financial position as at 31st December 2018 shows there are financial investments at amortized cost. In the notes to the financial statement from Public Bank, the example of the financial investments at amortized cost are the government securities and treasury bills and the debt securities. The policy of Public Bank based on MFRS 9 have clearly stated on the red line. Next, When an entity holds its financial assets for both collecting the contractual cash flow and selling the assets, and it also passes the contractual cash flow characteristic test, these financial assets are measured at fair value through other comprehensive income. Here we show you one example from the statements of financial position as at 31st December of 2019 from Telekom Malaysia Berhad. There are investments at fair value through other comprehensive income in Note 30C. In notes to financial statements from Telekom Malaysia Berhad, the example of the financial assets that are measured at fair value through other comprehensive income are investments in listed and unlisted bonds. We have drawn you one red line to show you the policy that used by Telekom Malaysia Berhad. It matches with the criteria that I have mentioned before to measure the financial assets at fair value through other comprehensive income. So here come to the third category of classification for financial asset. If an entity holds the financial asset for trading purposes and it does not meet the criteria for amortized cost and fair value through other comprehensive income categories, then it should be measured at fair value through profit or loss. Furthermore, there is an option for the entity to measure the financial asset at fair value through profit or loss too. When there is a conditional fair value option is elected, which means the financial asset of an entity is managed together with the financial liabilities that are measured at fair value through profit or loss. Hence, the financial assets should be measured at fair value through profit or loss too. Here we show you the statements of financial position by Telekom Malaysia Berhad as at 31st December 2019. There are investments at fair value through profit or loss. We will see the details in Notes 30B later. Notes 30B shows the example of financial assets that are measured at fair value through profit or loss, which are investment in a technology investment fund and certain investment in a rated corporate social responsibility sukuk. The policy also stated that the investment do not meet the MFRS9 criteria for classification at amortized cost because their cash flows do not represent solely payment of principal and interest. So the investments are measured at fair value through profit or loss. Lastly, there is another option for the entity to classify its financial assets, which is the option elected to present changes in fair value of an equity instrument not held for trading in other comprehensive income. This means at initial recognition of the financial assets, the entity irrevocably elected the equity instrument to present its fair value changes in other comprehensive income. Here we show you the statements of financial positions by Telekom Malaysia Berhad as at 31st December 2019. Here shows the equity investments that are measured at fair value through other comprehensive income. In notes to financial statements, the equity investment that are measured at fair value through other comprehensive income comprise the individual equity investments. The policy also stated that the group and the company have irrevocably elected the equity instruments at initial recognition to present its fair value changes in other comprehensive income, and the equity investments are not held for trading. Here comes to the end of the classification of financial assets. Let us pass back to Zack.
Thank you, Ms. Ang Mimin, for your sharing just now. Alright, so we continue on measurement of financial asset with our analyst, Ms. Idayu. Alright, Ms. Idayu, can you explain to us more detail about measurement of the financial asset?
Thank you, Zack. Hi, I'm back to explain more about subsequent measurement. This is an example for subsequent measurement. Okay, the example is Robinson Company purchased 100,000 of 7% bond of Evermaster Corporation on 1st January 2019 at a discount RM 92,221, and the bond matured on 1st January 2024. Okay, the market rate of interest is 9%. I already prepared the table of amortization for you all. For amortized cost, at 31st December 2019, the subsequent measurement of financial asset is 93,521 ringgit. Okay, next is for FVTOCI and FVTPL. We assume that fair value of bond on 31st December 2019 is 95,000 ringgit. Okay, to get unrealized gain or loss of bond, fair value at 31st December 2019, which is 95,000 ringgit minus carrying amount, which is 93,521 ringgit. So we will get the unrealized gain from this example, which is 1,479 ringgit. This is an example of FVTOCI in Statement of Comprehensive Income of Affin Bank 2018. They show net fair value changes in financial instrument at FVOCI, which is debt instrument. The amount is 25,139 million. While this is an example of net gain on financial asset in income statement of Affin Bank 2018. We go through to the note 35. They show unrealized gain or losses arising on financial asset at FVTPL, which is the amount is 7.863 million. Okay, back to you, Zack.
Okay, Ms. Idayu, I have one more question for you. Can you simply explain about what is derivative in the financial asset? So, Ms. Idayu.
Yes, Zack, I can explain a little bit about derivative. In MFRS 9, there are embedded derivative which defined as a component of hybrid contract. So here I already prepared some example for derivative financial asset in Statement of Financial Position of Telecom Malaysia 2019. The derivative for non-current asset is 158.4, while derivative current asset is 95.6. We go to the note 20, which is derivative financial instrument and hedging transaction. So the total for derivative instrument under asset is 254. Back to you, Zack.
Alright, thank you, Ms. Idayu, for your great presentation just now. I hope the audience can get some knowledge from your explanation today. So we have done our part 1. Now we have Zahra on the Studio B that will be summarize what we have learned just now.
Thank you, Zack, for giving me a chance to summarize on what we have been discussed before. Okay, firstly, I already explained what is financial instrument and what is financial asset with the example from financial institution and the example from non-financial institution. I also explained what is accounting guidance for financial asset. Once we use MFRS 9, automatically we also will use MFRS 132 and MFRS 7. Next, Ms. Idayu has talked about the measurement of financial asset. We have two categories of measurement, which are initial measurement and subsequent measurement. For subsequent measurement of FVOCI and FVTPL, if the amount of the fair value is more than carrying amount, so there are unrealized gains of financial assets. And lastly, Ms. Ong has clarified that there are three classifications of financial assets, which are amortized cost, FVOCI, and FVTPL. To measure financial asset at amortized cost, an entity has an objective to hold the financial asset to collect contractual cash flow and passes the contractual cash flow characteristics test. While to measure the financial asset at FVOCI, the entity holds its financial asset for both collecting contractual cash flow and selling these assets for, and it also passes the the cash flow characteristic test. For the financial assets that are held for trading, it will be measured as of now. Back to you, Zack.
Thank you, Zahara. Okay, now we move to the next subtopic, which is the recognition of the financial asset. So we have our expert today, the analyst. We have Mr. Zulhilmi. So, Mr. Zulhilmi from Penang, how are you today?
Hello Zack, thank you for inviting me. I'm fine, Alhamdulillah, at Penang now.
Okay, Mr. Zulhilmi, can you share to the audience about what is the recognition of the financial asset and when we have to recognize the financial asset?
Okay, thank you Zack. Now I will explain about the recognition of the financial asset. So the entity should recognize a financial asset when a contractual right to the cash flow of the financial asset is expired, or number 2 is asset is substantially transferred, including all risk and reward of the ownership, and the transfer is qualifies for the recognition. Next, I will explain to you step by step how we want to recognize the financial asset. So the first step is have the right to the cash flow from the asset expired? If yes, we recognize the asset. If no, we go to the second step. Has the entity transferred its right to receive cash flow from the asset? If yes, we go to the fourth step. If no, we go to the third step. Has the entity assumed an obligation to pay the cash flow to other parties? If yes, we continue to recognize the asset. If no, we go to the fourth step. Has the entity transferred substantially all risks and rewards? If yes, we recognize the asset. If no, we go to the fifth step. Has the entity retained substantially all risks and reward? If yes, we continue to recognize the asset. If no, we go to the sixth step. Has the entity retained control of the asset? If no, we recognize the asset. If yes, we have to continue to recognize asset to the extent of the entity continuing involvement. So this is the accounting policies for the recognition of the financial asset. So as I said before, they have two main points. The first one is the right to receive cash flow from the financial asset have expired, or number 2 is the transfer of financial asset is set out below and the transfer qualifies for the recognition. So this is the example of the recognition of the financial asset on how we present or show in the financial statement. So as you can see in the box that I have highlighted to you, the financial asset recognized is amount 2195. This is the financial report of Maybank Berhad 2019. So Zack, that's all from me. Thank you for inviting me.
Thank you, Mr. Zulhilmi, for your explanation just now. So we move to the next subtopic, which is reclassification of the financial asset. We bring to you the expert, the analyst, which is Mr. Zulfitri from Melaka. So hello, Mr. Zulfitri, how are you?
I'm currently in a good condition. Thank you for this opportunity and thank you for inviting me today.
Alright, Mr. Zulfitri, can you explain to us about what is reclassification of the financial asset?
Yes, of course. I can explain about reclassification to you all. For your information, once a financial instrument is classified in a category on initial recognition, it will remain in that category until it is derecognized. Next, an entity needs to reclassify its financial asset if the entity change its business model for managing those financial assets. And for example, the changes of its business model is like from hold to collect change to hold to collect and sell. And for further definition, the definition of the business model have been mentioned and explained previously by Ong Mimin. And the reclassification is only applied prospectively from the reclassification date. Okay, next we go to the measurement of the reclassification part. Basically, the initial measurement of financial asset can be either first amortized cost, second fair value through other comprehensive income, and the third one fair value through profit and loss. After reclassification occur, the measurement might be changed to either one of it. First, we go to if the initial measurement is amortized cost. After reclassification, the measurement might be changed to either fair value through other comprehensive income, the middle one, or fair value through profit and loss, at the right one. We look first if the measurement after reclassification changed to fair value through other comprehensive income. Basically, the measurement of fair value will be measured on the date of reclassification. Furthermore, the difference between the previous carrying amount and fair value are recognized in other comprehensive income. There are also no adjustment to effective interest rate and credit loss allowance account. Move on when it changed to fair value through profit and loss. Same like fair value through other comprehensive income, the fair value will be measured on the date of reclassification, and the difference between carrying amount and fair value are recognized in profit and loss. Okay, now we go to the second part, which is if the initial measurement is based on fair value through other comprehensive income. If the measurement after reclassification changed to amortized cost, the accumulated other comprehensive income will be removed and adjusted against the fair value of the financial asset. There are also no adjustment to effective interest rate and credit loss allowance account. Move on if measurement after reclassification changed to fair value through profit and loss. The accumulated other comprehensive income will be reclassified from other comprehensive income to profit and loss. The financial asset will be continued to be measured at fair value. Okay, next we go to the third part, which is if the initial measurement is fair value through profit and loss. The measurement after reclassification can be changed either to amortized cost or fair value through other comprehensive income. We look first if the measurement after reclassification changed to amortized cost. So, the fair value on the date of reclassification will become the new gross carrying amount, and the effective interest rate will be calculated based on fair value at the reclassification date. Next, we look if the measurement after reclassification changed to fair value through other comprehensive income. The financial asset will be continued to be measured at fair value, and the effective interest rate will be calculated based on fair value at the reclassification date. The impairment requirement apply from the reclassification date. So I'm done explaining about reclassification of financial asset. I'll pass back to Zack.
Thank you, Mr. Zulfitri, for your presentation just now. So I hope that information will be useful for all of us. Okay, now we have reached to the last subtopic today, which is impairment of the financial asset. So on the line now we have Mr. Hamzi from Taiping, Perak. Hello, Mr. Hamzi. How are you?
Hello, Zack. I'm fine, thank you.
Okay, so Mr. Hamzi, can you share with us about impairment of the financial asset, and could you give some examples on how it will be presented in the financial statement?
Yes, of course, can, Zack. Based on MFRS 9, under the impairment of financial asset, the company can impair their financial asset based on two conditions. The first one, when the company measured their financial asset at the amortized cost. The second one, when the company measured their investment in debt at the fair value through other comprehensive income, whereby the company cannot impair their financial asset when their financial asset has been measured at the fair value through profit or loss. Next, we take a look on how the recognition of the impairment happened. Credit losses of the financial asset are measured and recognized using the expected credit losses approaches, ECL. Credit losses are the difference between the present value of all contractual cash flow and the present value of expected future cash flow. Next, I bring to all the audience the expected credit losses chart. The expected credit losses can be divided into two groups. The first one is a 12-month expected credit losses approaches. The second one is a lifetime expected credit losses approaches. Lifetime expected credit losses approaches can be divided into three. The first one is a stage 1, whereby the stage 1 is the same as a 12-month expected credit losses approaches. Second one is a stage 2, and the third one is a stage 3. What it means by this stage? After this, I bring to all of you the information of this stage. Next, for your information, Zack and all the audience of this show, if the company have these 4 items, the company should do the impairment to it. The first one, when the financial assets are measured at the amortized cost. The second one, when the financial assets are measured through fair value through other comprehensive income. The third one, when the company have the lease receivable. And the fourth one, when the company have irrevocable loan commitment. To make it clearly, I bring to all of you an example from Maybank Berhad. As you can see, in the highlighted box is the item that need to be impaired of Maybank Berhad. As I promised to you, Zack and all the audience, here I bring to all of you the elaboration of the lifetime expected credit losses approaches in each stage. Stage 1. The impairment of financial asset fall in this stage when it not significant increase in credit risk since initial recognition. So we will recognize it using 12-month ECL approaches or lifetime ECL approaches in stage 1. The effective interest will be calculated on gross carrying amount of financial asset. Stage 2. Impairment of financial asset will fall in stage 2 when it has significant increase in credit risk since initial recognition. So we will recognize it using lifetime ECL approaches in stage 2. Effective interest calculated on a gross carrying amount of financial asset same as the stage 1. Last stage is a stage 3. The impairment of financial asset fall in stage 3 when the objective evidence of the impairment at reporting date. So we will recognize it using the lifetime expected credit losses approaches stage 3. And the effective interest calculated on net carrying amount of financial asset, whereby stage 1 and stage 2 is calculated on gross carrying amount. I'm sure Zack and all the audience must little bit blur on this impairment of financial asset, but don't worry, sit back and relax. Here I bring to all of you an example from Maybank Berhad. As you can see, here are an example of the impairment of financial asset measured at a fair value through other comprehensive income. It will disclose at a note to the account. Next, as you can see at the top of me, is an example of the impairment of financial asset measured at amortized cost. Not only Maybank Berhad, I also give to all of you an example from Takaful Malaysian Berhad. Like Zack and all the audience, here I bring to all of you the treatment of the credit losses, how the company treat the credit losses. Here I divided into 2 groups. The first one, when the financial asset has been measured at amortized cost. The second one, when the financial asset has been measured at the fair value through other comprehensive income, FVOCI. We take a look first when the company measured at amortized cost. The credit losses will be recognized in the profit or loss, and credit losses will held in a separate allowance accounts offset against the carrying amount of the asset. Next, we take a look when the company measure it at the FVOCI. The portion of the fair value that relating to the credit losses will be recognized in the profit or loss statement, while the remaining value will be recognized in other comprehensive income OCI. In this measurement, there will be no allowance account because the amount already carried at the fair value. Here, I bring to all of you an example from Maybank Berhad. As you can see in the highlighted box, how the Maybank Berhad disclose the credit losses in the financial statement of other comprehensive income. Next, as you can see in the highlighted box, how Maybank Berhad disclose the financial statement of the financial position of the credit losses. Here are other examples from 7-Eleven on how they treat the impairment of financial asset. That's all from me. Back to you, Zack.
Alright, Mr. Hamzi, thank you very much for your sharing today. So we have settled our discussion about the financial asset. So now we have Zulfitri in Studio C to summarize on part 2 of our discussion today.
Thank you, Zack. I'll continue with the second part of summary. For the recognition, we have to look at the contractual cash flow and whether the asset is substantially transferred in order to do the recognition towards the financial asset. Move on to the reclassification. As I've been told, reclassification will only be occur when there are changes in the entity business model. And there are 3 measurements after reclassification, which are to amortize cost, the second one fair value through other comprehensive income, and the third one fair value through profit and loss. And last but not least, impairment on financial asset. It will be used the expected credit loss approach, which it can be divided into 2. The first one, 12-month expected credit loss, and the second one, lifetime expected credit loss. Also, Hamzi have been shared on how treatment of credit loss to financial statement. I think I'm done with the second part of summary. I'll pass back to Zack.
Alright, Zulfitri, thank you so much. So to all audience, we have done our discussion today. I would like to thanks to all the 6 analysts for sharing about the financial asset today. Last but not least, don't forget to stay safe, stay at home. Let's together break the chain of COVID-19. Until we meet again with me, Zack, in the Attention Seekers TV shows. Thank you, bye-bye.
Financial instrument, measurement and recognition. Recognition and measurement.
Notes to financial statement. Notes to financial statement.
Divided into 2 groups. The first one is a 12-month expected credit losses approaches.
Yes, Miss Zack. Yes.
Which is if the
To measure.
Go to the
Okay, next we go to the measurement after reclassification.
They show unrealized gain or losses arising on